The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're doing well this morning. Man, there's, how do you really take any of the comments from Yellen or anybody else in the Fed scene at face value? How do you do that? You don't, and therefore you don't. Treasury traders don't really take that as something that they can count on. So we're gonna take a look at that really quick. Here's the 30-year. Wow, they're turning more hawkish, and Treasuries rise. Wow. Okay. Yeah. So that's why you can't trust anything coming out of the Fed. And I don't know if. I think Yellen fully believes what she's saying at the time, but it's kind of like the wind, and it can change abruptly. So that's why taking a look at these Treasury trades, and Tom and I were talking about this yesterday afternoon. It seems like they're looking for any reason whatsoever to kind of catch a bid now and just kind of move north. So if we're taking a look at, and this is the 10-year right now. Talked about there wasn't a lot of leverage for the past, month and a half or so. As I was kind of ranting and raving about other trades and saying, you know what, leave these treasuries alone. I kind of think now that the 10-year and the 30-year could actually explore the entire fair auction on the weekly. Now, markets made some significant moves up. We all know this. Treasuries have kind of gone sideways, which is kind of amazing, especially when you think about the wealth that's being created right now. The stock market being market capitalization total over 20 trillion. A lot of things are pointing toward, and I know they priced in some higher rates earlier, but any type of upsell of the apple cart on this massive move north in the S&Ps, you could get that retracement. That would be an incredibly cool trade, actually. So I haven't been really pounding the desk about being long treasuries lately, but I think now you've got some clarifying events, namely the stock market going straight up, and also some hawkish comments from Yellen. And this is the 30-year, by the way. So you've got, and this is the daily, around 150 here, bottom of the profile, and 149. So you've got a pretty good dig-in little situation here for a risk reward trade on the 30-year and the 10-year. And when you're talking about risk reward trades, how do you gauge that? How do you do the math on it? I actually think the other side of the box here, 156, is on the 30 years. It could happen, So might want to scale out of some of it on the way up if that happens. But that's the way I'm seeing it now. Taking a look at gold. Talked about staying away from this on the short side. Taking a look at the dollar, gold, euro, notes. They're all kind of interconnected, of course. But we took a look at gold yesterday saying, look, please, let's hope that this comes down and comes to us again at the 1218 area. And now we're starting to reach initial targets of that 1236 area, and we talked about not shorting this and starting to trade breakouts above that area. If we get above 1242, this is going to be an all-out short squeeze. But as you look at this, and a lot of this is also kind of telling something to the market. Big fan of being long gold here. I don't, normally get too excited as we've already reached some unfair highs on weeklies, for instance, as we've already moved up since we called this from around 1148. Remember that new profile, new stake in the ground and then being able to leverage this. We've already reached our initial targets, but I think this thing can actually go a lot higher. I mean, 1,300 could easily happen. I mean, like in a blink. But make sure you put your stops in. All right. I was trying to spell pterodactyl a while ago in the den. I think I failed miserably. The dollar, talked about not getting too excited about any rallies on this thing. And right now you could say, well, wow, we've broken stride, or excuse me, we've caught a bid here on the weekly number that we talked about, might provide a trading bounce. And then I wasn't super excited about getting long this anymore after that initial trading bounce. I kind of think the dollar's actually going to kind of settle back here and retest those 99.5 areas. But if you look at the dollar, you look at the weekly, you look at the dailies, it's not exactly the short situation yet. I'd like to see this thing have a daily close below this unfair high on the daily. And then I think we got a real good chance to revisit these lower numbers. But we need to have the stake in the ground first here. It was a little bit of a cowboy trade trying to short it yesterday. And I'm sure Tom made money on that. But, let's let somebody else figure out that part. We could spin around here and just continue to move north, just like Apple kind of did that, 114 and some change. And now Apple's significantly higher. So that will teach you a lesson, just that trade alone, staying away from something until it kind of shows you itself. And this is the same situation here on the dollar. Let's let it show itself. Let's let it put a stake in the ground back in the daily profile. Then let's hammer it. All right. The VIX. All right. So sitting around 12. Would love to see a weekly close back above 1162, but I think I hung on to some I hung on to some lottery ticket puts. You guys know that on the S&Ps, and we talked about yesterday some cracks in the armor. I think we were, and I'm sorry, here we go. This is our 60-minute view. Talked about some cracks in the armor pre-market that never reached any targets down below, and I actually got stopped out of this. So no harm done. There were definitely reasons to look at this from the short side yesterday. But right now, with the VIX starting to ramp up, you've had a lot of days in a row. I was telling Tom yesterday, in markets like this, when you just have a scene like this happening every day, the best case scenario would be to gap up significantly, find the sellers finally, and then let it get out of control, and then start using the lower term time frames to start gauging that trade down. It's not happening today. We're kind of opening up unchanged and starting to sell off a little bit. And remember, if in an uptrend, a lot of times, and this is the way the specialist runs his book in New York, you're in an uptrend, you kind of open a little lower, it finds more buyers. So we want to ultimately have that opposite effect here, but we're not getting it yet. We're going to talk a little bit more about this when we come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. We were talking about the S&Ps on the close, at the close of the last segment. And, we were talking about, just the way a lot of times these things really turn around is you're in an uptrend, and then you get that gap up, and then you find a lot of sellers, and it kind of gets out of control, and people start panicking that was the high print, and they all start trying to get out the door at the same time. So we haven't had that yet. We've kind of, if you look at this, we've kind of been opening where we closed every day. So we're having that same effect today, unfortunately. So it was wild. I was talking about the specialists too back in the old days on the New York Stock Exchange. Tom probably remembers this. Those guys could just do anything they wanted to. If I was a specialist, I mean, and they, they don't have any margin requirements, all that kind of jazz. They're there to balance the market, and they were the ultimate market maker before all these ECNs came into play. So if you're trading the AXP and all of a sudden, it ramps up on the close, the specialist gets squeezed a little bit. All he's going to do is gap the stock up in the morning, sell more because he's got a bunch of market order buys there possibly, and then cover the stock lower and control the whole market. And you could trade against the specialist, understanding how he had to run his book on those listed stocks. Back in the day, it was interesting, and a lot of prop firms made an entire living off, relative strength trading against listed stocks, and some firms just exclusively focused on that. All right, that was kind of post-So's Bandit type stuff. All right, so crude still. I mean, I just can't say enough about wanting to be long this trade and let it play out, but it's obviously been stuck in the mud this is a weekly view, 3 months. So just waiting and waiting. Here we go. Still think being short that is the risky trade. All right. I want to check on this. briefly. Yeah, this is our Kansas City wheat trade that John from Philadelphia was so nice to alert us to, actually. And then technically we looked at and kind of fell in love with it. So here's where we're at on that trade, 467. We were looking at about 428. That was kind of the launch point there for that one. Here's the daily. Still don't see any reasons to take this off. So here's the 240s kind of guiding this thing up, as you can see. Interesting little situation that has not played itself out yet. All right, we're going to hit silver briefly. This is the March contract. And, you know, silver and gold we talked about. I talked about liking gold a little bit more, but this is silver yesterday, or this past week, excuse me. We had that close above and then go back and retest, but this was kind of a little bit dependent on gold crossing some borders it's doing now. So I think these things could lift significantly. I mean, you got to start getting a little concerned about inflation right now, and some people being funds and everybody else on the planet may start taking a hard look at these things. And remember, gold could just flip up to 1,300 in a heartbeat. What does that mean for silver? Where's your targets on silver? I let these profiles kind of regulate things up or down. I don't really set a lot of targets. I just kind of let the trade play out relative to what's going on with the technical damage or not with the profiles. So I don't really necessarily have a target in silver. I'm picking that 1,300 in gold because that's a big whole number, and things usually kind of gravitate to those whole numbers. At least psychologically, people have those in their head. And gold usually overshoots a lot of those numbers, so be prepared for that too. So I wouldn't, even if gold makes a pretty significant rally right now, I would not be looking to short it at any levels anywhere. I'd still be looking to try to buy support on it, just like it's offered some support yesterday and this past week a couple of times at 1218. 1236 again is a big number, 1237. And if we clean and clear 41, again, there's nothing in the way up to 1,300. All right, let's take a look at a couple of stocks that are in the news here. But first of all, I want to take a look at a couple of things we were looking at yesterday. So this is, I just put 4 sorts up here, breakdowns and downtrend resistance. So as of yesterday's close, a lot of these are populated this way. There was a couple of stocks on here on, see, Kimco Realty again, man, KIM. This is just the gift that keeps on giving. You know, we had some short opportunities here, and now we've got a breakdown again. And, you know, any type of market pullback, a lot of these stocks that have been on this list. I think we looked at Estee Lauder on the close yesterday too. Let me see if we can find that. Maybe it was on this one. Yep, there it is, EL. This one was looking super mega attractive to me. They kind of got up into this weekly on furlough and couldn't pass above it. You got the market kind of coming off a little, coming off. 4 points. Woo! That's our version of coming off now. Amazing. When it does come unglued, it will come unglued though. 83.90. Things that go up this quick, they will have some volatility at some point. 83.90. Nice little place to play defense against this short. There's not a lot of shorts on the board, but if you can find some, and the market cracks a little bit, these are the ones that just, they take the air out of them pretty quickly. Another one we were looking at, Whirlpool, I believe. Yeah, this is one that was really super attractive. And again, you can find these little gems in the scanner all day long. Here's the 177.18. I like this one a lot. I love that breakdown. Below profiles, go back and retest. If you're looking at if you're looking at making a trade on a stock that's weak in a relative sense, you got one here. It's just empathetically rallied with the market and waiting to be hit hard on the short side. Now, Amazon's on this list, but we're going to look at this one, and it's not in a downtrend, and it's on the all-time highs here. So we're going to take a look at that one and say, you know what, that's a cowboy trade. There's better shorts out there, and we're going to pass on it. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So we're looking at breakdowns now. Talked about a couple of stocks that might be lifting their head up to be hit again. AIG obviously getting hit. Might want to keep this on your radar screen. The retracement back up into 62.58 would bode well, but you can't short this right now. Let's take a look at FCX. Now, I wouldn't I wouldn't be playing around with this on the short side either. That's nothing we want to look at. Chesapeake Energy. Sorry guys, getting this right. Could stay away from that. I'm not one to be short a lot of oil stocks right now. Let's go into the oil sector really quick. Let's take a look. Seller dweller down here of all the stocks, but the way I'd play oil right now is try to find some strong stocks. We looked at a couple of these yesterday. There's a couple of them in here. PXD. Wow. So, you know, again, we talked about the XLE. Let me just pull this chart up here too. This is our XLE chart. Never quite getting down into the by the major dip there. And that's another good sign here for oil in general, I think. So you've got a couple of stocks. This is our weekly on PXD. So if you're running a constant sort, which dynamically updates during the day in the scanner, and you set it on uptrend support, you know, these types of things will pop in. And again, reviewing these at night can do wonders for your trading portfolio. So, you know, you got a stock and you kind of got a bias long slant towards oil and PXDs in that sector, and you kind of get it. Markets come to you significantly on an area, you can pick a battle. That's the same concept now. Now it's trading above profiles. Let's take a look at a couple of stocks that have been in the news. AMAT. Let's take a look at this. Topping estimates here. So looks like we're printing around 36. All right, so a little bit higher here. So what do you do with AMAT? Obviously, I think David White's talked a lot about this one. Yeah, I couldn't buy it. I couldn't sell it. So I'd probably be a pass on that. Just kind of stay away from it. Let's take a look at ABX. Barrick Gold. So pretty much trading exactly like gold here. So trading about 1971 this morning. Don't short this. If you're long, I don't think you got any reasons to get out of the trade right now. CBS Corp down a little bit. Here's the drill here. Here's the weekly. Here's the daily. Well, that's not the daily. Here's the daily. You know, a lot of these stocks that are, you know, earnings related right now, okay, so it looks like we're printing 64.25. So if we're looking, I mean, it's down just a tad. It's obviously not making new highs as the market's made new highs recently. But again, I think you got better shorts out there, even though on a kind of like a near-term beta situation, it's kind of underperforming. But again, I think you got better things to look at, namely some of those stocks we pulled out of the scanner a while ago. Let's take a look at Cisco. All right, so 33.25 looks like we're printing this morning. Had that close outside the profiles last week, so that was kind of a sign. Okay to be long, not okay to be short, but you got earnings now. What do you do with it? This is the daily. Man, that is a massive move for that stock. Ooh. Yeah, it's can't buy it, can't sell it. Just giving you updates on if anything is available. Looking at the stuff we normally look at relative to some of these stocks. Let's take a look at Kraft Heinz. All right, so trading down 88.93. So this is one that might be kind of interesting. KHC. So we've kind of dived back in the profile from all-time highs. This may be something that might have some follow through. If we get a little bit of move up, back up into 90.15, I actually think this might be a trading opportunity on the short side. Let's take a look at SodaStream, SODA. Is that the thing? Is that the thing where they just made a little device to output carbonated water, CO2 and water? Selling carbon dioxide mixture into water. Here we go. So 49.54. So looks like that's where we're holding this morning. Here's the weekly on SodaStream. So what do you do with this? Is it gone too high? Is this that gap up in an uptrend that everybody's looking for to get out of the stock? Could be, but the only way you can trade it, and hopefully it would kind of rally back up into 51.30, so that would be the only way you could probably get a short off here with some logic of playing defense and being able to put stops in. But again, you're playing with fire with these things. There could be quite a few people short, and there probably is. And they may be forced to get out this morning. So just watch out for that. All right, let's hit some currencies really quick. So I was looking at the euro. Euro kind of reversing here. Let me restart that, guys. Thanks for bearing with me. Taking a look at the euro. I can get this back up. Okay, here we go. I love this action on this. We talked yesterday about, being able to buy something higher than you recently sold it on a stop out. This is a very good case in point that sometimes it's okay to get back in the water, especially when you have these kind of key reversal situations back inside the profile. This is our long-term weekly. I fully believe the dollar is going to revisit some lower numbers, so I like this action now even better than I did before, coming down into it on the initial pullback. Your initial targets we talked about on this are 106.93. Let's just call it 107. But that would be prudent to probably take some off there. But I think we can go a lot higher on this. I mean, 111 could be in order on this. And I know Tom's a little bit more short-minded the dollar than I am, but I think the dollar could pull back here. So keep that in mind. The yen, we're going to hit this when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. And I was actually joking yesterday, or maybe the day before, saying I can't believe I'm saying go long the euro. But when you got a trading opportunity, you got a trading opportunity. And I'm not so bullish on the dollar on these kind of pullbacks right now. And if you guys know that the euro is a pretty large component of the dollar in an inverse relationship. So, and this administration. I mean, the man doesn't sleep, and there's a lot of things going on that could affect currencies globally right now, like a new Twitter. I mean, look what he did to H&R Block yesterday. I don't know if you guys caught that. With the new tax thing, he actually named H&R Block in the Twitter feed going, H&R Block's not going to like it. Okay, H&R Block starts going down. Let me see if I can pull that up here. Yeah, so I mean, not that this wasn't a piece of crap already, and we actually had this on our short list forever. But him saying that just kind of caused that stock to come off. So that being said, a lot of things that the MO is, China's. You guys know the drill. China's ripping us off. They're devaluating their currency. Blah blah blah. I think he's probably smart enough to not get into a currency war, but maybe not. Maybe there's going to be some gyrations here. So, the dollar, all things considered, he'd want to devalue. I mean, okay, if you're going to devaluate your currency, we're going to devaluate ours. But there's ways to accomplish those goals. But that being said, talking about changing my tune on the euro, this is not like a sea change my tune event. This is a trading opportunity, and I think the dollar can come off, and I think there's going to be some great currency plays this year. And a lot of times you don't know which way these things are going to go, but there's going to be some currency moves that are probably going to be historic this year, I would say. So the euro having a little trading opportunity, possibly even up to 111, could be in order here. And that's kind of a blip on the screen relative to major volatility. But yes, I did say go long the euro. Just want to validate that. It's amazing. I hadn't really poked into QuickBooks in a long time talking about H&R Block. Man, they've got a lot of cool connectors in there now. Do you really need to go to H&R Block anymore if you just hook your bank account up to it and spend a couple of seconds? And there's a company called YODLEE, Yodlee, that we're actually using for some things in the software company right now. And basically, it's I saw Intuit bought Mint, who bought. I mean, there's a lot of fintech, that's the buzzword. If you say you got a fintech company, man, you can go raise a couple $100 million just on that word alone. Fintech, David White, remember that. We got to talk about that after the show, because I feel like we can go raise $100 million. But a company called Yodlee, Yodlee, if you want to look it up, I mean, that's kind of becoming now the de facto. I mean, I think what this company's done is they've connected into SunGard or ADP, which is SunGard. If you're ever been in the brokerage world, Tom probably knows this. He could call in and we could talk about how SunGard really is in the back of a lot of these clearing firms processing information. I mean, fixed connections to banks, and that, FIX is it's called fixed protocol, is the kind of the banking language. It's a very old programming kind of scheme or schema. And SunGard is usually like the tail end, intersection of everything on the back end, along with like ADP. So for instance, like a Penson Financial Services back in the day, or even, Charles Schwab or whatever, they're eventually dealing with SunGard on the back end. So what I think Yodlee's done is probably, instead of writing connectors into, they say they've written into 15,000 institutions. I think they've pretty much hooked into SunGard or ADP, and they've got access to all this information, and it's called bank level security ways of doing things within their framework. I think about 95% of the fintech companies that are dealing with banking apps and things like that just use Yodlee as a default type mechanism. So you can go into like I was talking about QuickBooks and H&R Block. I mean, I go into QuickBooks and I kind of connect the Wells Fargos or the rest of the criminals into the system. It's using like a third-party type arrangement a lot of times, like Yodlee. So, H&R Blocks, unless they kind of get with it and get in the technology scene and somehow make a new, splash on what's the compelling reasons why you need to use them, I just don't see this thing going up until that day happens. So, but Yodlee's an interesting situation. It's relatively cheap for what you can do. So you can write an app that, if you go to I think Investly, investly.com, places like that have used like a Yodlee type situation to basically aggregate information from all your accounts so you can see them in one place, and secure logins and bank level security and all that. So I wasn't even, we were doing a job for somebody and they actually pointed us towards it and said, we want to use this and not pay you a lot to integrate into every API. That didn't sit well. David White knows what I'm talking about. Anyway, let's take a look at the Aussie here. I think Investly is it doesn't even have the I. I think it's just Investly. Just drop the I. It's just an example of somebody using Yodlee, I believe. But you can go there. A lot of these sites now, you can just aggregate everything, and they haven't done all this crazy work. They just use Yodlee to third party to allow you to do it in a secured manner. Anyway, and that's like what a Betterment does too. Those criminals ask you 5 questions and tell you what to do with your money for the rest of your life. Unbelievable. All right, let's take a look at the Aussie here. We didn't even talk about the yen. Let's revisit that. All right, so the yen did its kind of dollarish bounce off of those weekly unfair lows, which was kind of cool. But I'm seeing the dollar and the yen. This is the daily on the yen, very similar to the dollar situation on the dailies. I'm not so confident that we're not going to revisit some lows here, just like on the dollar. So keep your eye on that. That yen trade might be over for a while. Here's the dollar. I think this server's delayed on the dollar, so I don't know what's going on in the last 10 minutes, but just be aware of that. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So finished up about Yodlee. It was amazing that, you know, a lot of people use them, but it's weird to go into a website, get a login and password, and just start typing in all your banking logins, users, and passwords and stuff. It just, I just, at some point, somebody using those for the fintech solutions are, it just seems like it's going to blow up at one point, and somebody's going to have everybody's bank passwords. Exactly. Yeah, I couldn't do it. I went there to Investly just to kind of like, okay, no, I don't think so. Secure. Yeah. Also, I think I'd love to talk to David about this, but, you know, AWS has gotten into so many things. I don't know how they cannot be declared a monopoly now. I mean, it's not just a conspiracy like hate Amazon type thing. They're moving into that with that Chime, a product again that we were working on in that space, in that kind of screen sharing collaborative space. I'm sure AWS, and now I looked at the pricing on it. It's ridiculously low, ridiculous, like to the point of losing money low, which is what they do. It's amazing. Anyway, all right. So let's get back to trading. Digressing here. All right, so we finished up with the currencies. Just wanted to give you a heads up on what was going on there. Let's take a look at Apple because SodaStream. I thought of that first, by the way. Silver. We'll take a look at silver. I'm long as heck silver and gold right now. I just, I think those are very appropriately in order to be bought right now. Not just as a trading opportunity at this stage. I think you got a lot of things. You got a lot of troops on the border on the long side right now on that one. Here's Apple. All right. Where was that 114 area that I was saying? Don't short it until we get below 114.72, and now we're $750 billion or whatever the market cap is now. But it's okay. The good news is on something like that, it kept me out of doing something stupid like shorting something that was too high. That's the victory I'm looking back on it as now. So here's the 240s. We've had kind of profiles appearing below price action all the way up. So you might have, and again, this is probably not the smartest thing in the world to do, but on a contra trade, these are the levels. Put it this way. It's up to you, but I think you got better shorts out there. 133.34 and 135.70, that could be explored in a heartbeat. But on the long term, weekly and daily, you just don't get it, do you? Here we go. You just don't have any new profiles even attempting to appear yet. So there's no new supply coming into the market as far as a new balanced area. So again, probably got better things to put mental capital towards focusing on the short side other than Apple. Tesla. All right. So where are we at this morning? 276.70. All right. So anything goes. This is like Thunderdome here with Tesla. I mean, anything can happen. So if you're looking to try to, let's see where we're at, 276.60, could have some technical damage for the first time in forever on this 240 time frame. As you can see, we're just kind of sitting on the edge of the cliff. You could take a shot on this. You could take a shot on it, but then you know where to put your stops above 276.60. Stay tuned for Larry. All the rest of the hosts on TFNN, guys. Thanks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.